Welcome to the Pro Tickers Deep Dive, your go-to breakdown of the stock movers and major stories at the close of global trading. Let's dive into today's market action. Today, we're not just, scanning the headlines. We're really digging deep into a truly fascinating stack of sources.
Yeah, it covers a lot of ground.
It really does. Everything from the intricate web of global trade, crucial central bank decisions, to significant domestic developments, and, well, those surprising market shifts that always keep us on our toes.
Hmm,
Our mission, as always, is to distill the most important actionable insights for you, our listener.
right. Cut through the noise.
Exactly. We want you to walk away feeling not just informed, but, genuinely ahead of the curve. And as ever, we're committed to presenting all sides of the story, drawing directly from the sources without endorsing any particular viewpoint. All right, let's kick things off with what's unquestionably dominating global economic discussions: the escalating trade disputes.
Yeah, that's front and center.
We're seeing some truly aggressive moves, with the United States proposing new 30% tariffs on key goods.
30%. Wow.
Yeah, this is hitting sectors like automotive and agriculture particularly hard.
That's a significant tariff rate, especially for those sectors. Very significant.
It absolutely is.
And what's really fascinating here isn't just the tariffs themselves, but the rapid formation of these strategic alliances in response.
Okay.
European leaders, for instance, they're wasting no time. They're actively engaging with countries like Canada and Japan, trying to forge, a unified front against what they're calling these aggressive trade policy shifts.
A united front.
Yeah, and officials are clearly signaling they're prepared to retaliate,
Yeah.
potentially targeting billions in U.S. goods if these new levies are implemented.
So beyond just the immediate economic hit and the
Oh.
tit for tat, what's the long-term play here for these new alliances?
That's the key question, isn't it?
Are we looking at a temporary diplomatic maneuver, or does this signal a more permanent redrawing of global supply chains rather than just, a fleeting trade spat?
Well, if we connect this to the bigger picture, it certainly feels like more than just temporary bluster.
Right.
The fact that behind-the-scenes diplomacy has already stalled around some of those critical sectors like automobiles and farming,
Ah, okay.
even as these alliance discussions continue, suggests a deeper, more fundamental disagreement. It's less about a minor adjustment and more about different philosophies of global trade, perhaps.
Different philosophies.
These alliances could very well be the groundwork for new, more entrenched trading blocs, potentially diversifying supply chains away from historical dependencies.
Yeah.
This isn't just talk, it's a very real economic chess game being played out,
Yeah.
with long-term consequences for where and how goods are produced and moved globally.
Yeah, that's a big shift to consider. And these global pressures certainly aren't happening in a vacuum.
No, definitely not.
Okay, let's unpack this. Because back home, we're seeing a lot of chatter around domestic economic pressures, especially concerning monetary policy and some significant political contention. There's renewed scrutiny on central bank leadership, particularly after that highly publicized audit report detailed significant cost overruns in their headquarters renovation.
Oh yeah, the renovation story.
The project critics are now calling a symbol of bureaucratic excess during a time of public austerity.
Right. The debate there is incredibly heated. Critics are pointing fingers at mismanagement, what they see as excessive costs for this renovation.
Sure.
However, others are quickly countering, arguing that the inflationary pressures we've seen across the economy,
Yeah, everything costs more.
exactly, coupled with pervasive construction backlogs, have simply driven up expenses across all sectors, making such overruns more common than not in today's environment.
Yeah.
The central bank itself is trying to navigate this narrative.
And how does this renovation controversy tie into their core mission of monetary policy? Is there a link?
Well, if we connect this to the bigger picture, this kind of public pressure can definitely influence policy decisions down the line, even if indirectly.
Okay.
This specific controversy, remember, comes right on the heels of ongoing criticism regarding the central bank's decision to hold interest rates steady.
Right. Holding steady.
There have been very vocal calls from high-ranking officials for deeper cuts, citing a pressing need for more aggressive economic stimulus given softening growth indicators.
So they're getting hit from multiple angles.
Exactly. You have a central bank trying to balance inflation, growth, and now public perception of their own spending, which puts them in a deeply challenging and exposed position.
Speaking of growth indicators, let's pivot from policy to the broader market outlook.
Okay.
We're kicking off a new trading week with a sharp focus on corporate earnings and those ever-important inflation indicators.
Always key data points.
The general anticipation right now is for the slowest quarterly growth in years. Earnings expectations seem to be moderating significantly from earlier, more optimistic forecasts.
Exactly. In the coming days, we're expecting reports from some of the biggest players out there, major financial institutions, the big banks, and industrial conglomerates, the bellwethers.
Precisely. Investors will be poring over these reports for crucial signals on consumer demand and broader profitability trends.
Okay.
So for you, the listener, these aren't just abstract numbers on a screen. These corporate reports offer a direct, granular look into the health of the real economy.
Right. What's actually happening?
Yeah, showing how consumers are actually spending, where businesses are seeing resilience, and how they're adapting to the current challenging conditions. It's really going to tell us a lot about where we might be heading in the next few quarters.
Now, for a bit of a curveball, or maybe even a bright spot, in the digital asset space, cryptocurrency.
Ah, crypto. Always interesting.
A leading cryptocurrency is currently trading above $122,000.
Wow.
That's a huge move. It marks a significant 30% rise just since December.
It's an impressive jump, no doubt. This growth is largely being attributed to two main factors that are worth watching closely.
Okay, what are they?
First, renewed institutional interest, meaning we're seeing major banks and established investment firms making significant moves, allocating capital.
The big money coming in.
Right. And second, increased adoption across various financial platforms, making it easier for people to use and transact.
Easier access.
Exactly. This raises an important question, though. Is this a sustained trend driven by fundamental adoption and infrastructure build-out? Or is it primarily speculative capital chasing momentum?
That's the million-dollar question, isn't it? Or maybe the $122,000 question now.
Yeah, something like that.
What's the key insight in distinguishing between the two right now? How do we tell?
Well, the key insight isn't just the $122,000 mark itself, but the type of institutional interest we're seeing.
Okay. Deeper than just the price.
Right. Are these new entrants building out infrastructure for broader utility, like new payment rails or, decentralized finance applications?
Real-world uses.
Or is it predominantly speculative capital simply looking to ride the price wave? That distinction is absolutely crucial for the long-term outlook.
Makes sense.
If it's more about utility and infrastructure, that suggests a more sustainable upward trajectory. If it's just pure speculation, then, well, we might see more volatility.
Got it.
For now, it's certainly providing a bullish signal for digital assets in general.
Shifting our gaze now to Asia's economic landscape, we've got some interesting new trade data.
Okay.
A major Asian exporter is reporting a record surplus. This is despite declining shipments to the U.S. after several months of sharp decreases. That feels like quite a contradiction. How do we reconcile that?
It is a fascinating contradiction, yeah.
Okay.
And it adds another layer of complexity to the global trade picture. Simultaneously, we're seeing long-term bond yields in a key Asian economy surging.
Okay, bond yields surging. Explain that for us quickly.
Sure. For those listening, when bond yields surge, it means investors are demanding a higher return for lending money to that government.
They want more interest.
Exactly. In this specific case, it signals heightened investor concerns. This is largely ahead of upcoming elections in that region, coupled with concerns about ballooning government spending.
Politics and debt.
Essentially, investors are perceiving a higher risk, whether from potential political instability or the long-term fiscal health of that nation, and they're demanding to be compensated for it.
All right, let's pivot to the geopolitical front. Here's where it gets really interesting. The ripple effects of diplomacy.
Always complex.
We're seeing a noticeable disruption in international coordination. For the second time this year, a key U.S. representative will not attend a global financial summit.
A second time.
This time it's being hosted in South Africa. We understand this boycott is linked to ideological differences with the summit's overarching theme.
That's a significant absence on the global stage, especially from such a key player. It definitely sends a message.
Yeah.
However, it's important to note that diplomats and finance ministers from many other leading economies are still expected to be at this summit.
So the meeting goes on.
Right. They're gathering to discuss long-term strategies for sustainable growth, equality, and regional cooperation. So, while one major player is stepping back, the broader work of global finance and coordination continues, perhaps even with new dynamics emerging in their absence.
On a different foreign policy note, there's been a significant shift regarding military aid.
Okay.
The U.S. has announced plans to send advanced air defense systems to a conflict-affected Eastern European nation.
Advanced systems. Okay.
Quite a pivot from their previous stance, which had been less direct, more focused on diplomacy, perhaps.
This is indeed a noteworthy development. And the crucial detail here is the funding mechanism.
How it's paid for.
Exactly. Officials have explicitly stated that the funding for this aid will come entirely from foreign contributions, not from domestic U.S. budgets.
Interesting. So not U.S. taxpayer money directly.
Correct. This move signals a deliberate change in the current administration's approach, which had previously declined further direct funding, citing, as you said, a preference for diplomatic resolution over increased military engagement.
So it's a workaround, maybe.
It's perhaps a creative way to continue support while addressing domestic political and budgetary constraints.
Back on the domestic front, a truly pressing issue continues to unfold. The aftermath of devastating floods in a southern U.S. state.
Just awful news there.
The situation remains incredibly dire. More than 100 people still unaccounted for, and sadly, the death toll continues to climb.
Yeah, the search and rescue efforts did resume, thankfully, after additional storms caused further delays.
More delays. Terrible.
Making an already dire situation even more challenging for first responders. The Federal Emergency Agency is facing significant scrutiny over its response.
I can imagine.
Officials are actively defending their actions against accusations of political negligence. They're characterizing such claims as opportunistic, but the public pressure remains intense as the recovery efforts continue amidst such a profound tragedy.
Moving to another domestic story with potential legal implications. We're seeing a wave of dismissals at a major federal agency.
Yes, that's been getting a lot of attention.
It certainly has.
Reports suggest that several top legal officials were removed from their posts following past investigations that involved high-ranking political figures.
The timing seems notable.
These removals have, quite naturally, prompted an ongoing, vigorous debate over the degree of political influence on judicial independence.
Yeah, that's a core issue.
It raises questions about the separation of powers and whether these actions undermine the integrity of federal institutions. It's a complex and deeply sensitive issue that continues to evolve.
And on a more somber note from local news, there was a tragic shooting incident at a place of worship in a southeastern U.S. city.
Oh, that's terrible.
Which sadly left 2 dead and others injured.
This incident apparently followed an earlier confrontation involving law enforcement.
Okay.
The suspect, who was later killed, reportedly opened fire after fleeing from a traffic stop and carjacking another vehicle, leading to the tragic events at the place of worship. It's just a heartbreaking local story that has shocked the community.
Absolutely tragic. Finally, just a brief wrap-up from the world of sports.
Okay, a quick change of pace.
The professional baseball season has officially reached its midway point with the All-Star break. Teams are jockeying intensely for postseason positioning as we head into the second half.
Yeah, the pennant races are heating up. And in tennis, we're seeing continued dominance from recent tournament champions.
Same faces winning.
Pretty much. They're consistently maintaining their hold on the sport's most prestigious titles, showing remarkable consistency at the top of the game.
As we wrap up today's deep dive, remember that the interconnectedness of global trade, monetary policy, and even domestic events can ripple through markets in unexpected ways. Keeping an eye on these varied signals is key to staying ahead.
It really is all connected.
Consider how the strategic alliances forming in response to tariffs might reshape long-term supply chains, or how evolving central bank policies could impact investment opportunities far beyond interest rates. The market is a complex ecosystem, and understanding its underlying currents gives you a distinct advantage.
Thanks for listening, and we'll see you next time on the Pro Tickers Deep Dive. Stay sharp and stay informed.